Welcome back. You're still tuned into Business Lunch on CNBC TV 18 and an important stock-specific story today. The Fortis stock is currently down around 17%. This after the Supreme Court extends the stay on the long-awaited open offer to Fortis Healthcare shareholders by IHH. It has also directed the Delhi High Court to consider appointing a forensic auditor for the IHH deal. So Ekta is here with all of the details. Ekta.
Thanks for that. Well, yes, definitely a setback which is coming for Fortis as well as the shareholders as well as the promoter IHH. Now, basically, what does this mean for IHH? A delay in the open offer as well as the possibility of a forensic audit. Now, the Fortis management in the past has said that IHH is in fact committed to Fortis. Analysts, however, point out concerns on the IHH commitment when it comes to, going full gung-ho on growth because of the uncertainty of a possible forensic audit as well as the uncertainty of an open offer. The Fortis stock in that case could possibly be an M&A candidate according to analysts. Now, what does this mean for shareholders? The delay in the open offer has now been since close to 4 years. SEBI too, for example, had urged the courts in 2020 to in fact allow the open offer to go through. Experts say, however, that the open offer has to be put into context, and in this case now the validity of the deal is in question, hence the open offer does not take precedence. I just want to add that since the past 4 years, shareholders, however, have had the option of exiting the Fortis stock even at a higher price than what the open offer price was at that time, which was 170 rupees per share. Now, what about the Fortis stock as well as the overall performance in the past 4 years? The stock, in fact, has been an outperformer. It's given returns of around 90% if you compare it for the open offer price of 170 to the 52-week high, which it was sitting at over 300 rupees last week. And Q1 FY23, the numbers were strong. The elective surgical revenue, which is 61% of the revenue, was at an all-time high. Q1 FY23 margins were at 17%, which improved. Hospital occupancy was at 65%, expected to improve to around 70%. International patient revenue also was up around 126% year on year. So it's really firing when it comes to the hospital business. The management has said, Fortis has put out a statement that they will be looking at seeking legal advice with regards to what has taken place today. But on a larger context, the street will be watching out details when it comes to a possible forensic audit, open offer movement, as well as what the IHH commitment and plans would be going forward.
All right, an important and precedent-making decision this one is coming, and as far as M&A and deal scenario is concerned, where open offer was not allowed, there's a stay that continues on the open offer while the deal has already been done. A quick look at the markets, and yes, there is some bit of buying seen at the lower levels, and especially in the banking space. So take a look at Bank Nifty at the moment, 1.35% down in trade, and there is some buying seen in some of the big banks like Kotak Mahindra Bank, SBI, ICICI, Axis Bank, and mid-cap universe. Keep an eye out on that. That is also inching towards a flat line. Nifty and Sensex about 0.5% down. So some bit of buying and some bit of relief that is coming in the market. Shifting focus to some important news flow coming in from the telecom sector now. And the Department of Telecom has released the Draft Telecom Bill for public comments. My colleague Abhimanyu is here to tell us more about that. It's important to remember because OTT, which is the new age game, may come under the fold of regulatory framework. Abhimanyu.
DoT has introduced the Draft Telecom Bill to provide relief to stressed carriers. The bill seeks to simplify the framework for mergers, demergers and acquisitions or other forms of restructuring by only requiring intimation to the licensing authority. The Telecom Department has put out the Draft Indian Telecommunications Bill 2022 up for stakeholder comments by the 20th of October, under which the framework for mergers and acquisitions will be simplified and the relief, write-off or deferment of dues may be allowed in cases of payment default in extraordinary circumstances. Companies will have to comply with the restructuring scheme under the Companies Act and inform the Department of Telecom accordingly. In case of default payment of any amount, the government will determine the extraordinary circumstances, which will include financial stress, consumer interest, maintenance of competition in the sector, or reliability and continued supply of services to allow full or partial relief, write-off or deferment or conversion of amount into shares through a special enabling framework. Spectrum allocated to telecom companies presently undergoing insolvency that are unable to offer services, pay dues or comply with license conditions will be taken back by the government.
All right, Abhimanyu, thanks a lot for getting us the latest on the draft telecom bill. We have to get into a short break now, but you don't go anywhere because we have some excerpts from our exclusive conversation with JP Morgan's Jamie Dimon coming up for you after this short break.